First thing I want to say about this topic is fear mongering is the thing that will destroy the market, not a tariff, not a trade war. Um, Looking at a screener and just telling the screener to give me the giants in the market cap of 200 billion or above. And also I did do technology services. Everything in that sector, these are your big dogs, are things that pretty much control the world. Microsoft, Google, Meta, Oracle, all your big dogs right here, the biggest of the biggest. They all still have a buy rating, a strong buy rating, and most of them having a positive expected growth and things of that sort. So just wanted to say that before we jump in the charts and talk about what you should do, because the market moves in two ways. It's either trending or it's consolidating. Why it's trending, you could say three ways: up, down, or sideways. But it moves in two ways. It's either trending or it's not. Okay, so if emotionally you've been impacted, as a trader, you have to understand it goes both ways, meaning you should be applying the same principles to a trade opportunity to short it or put in a short or a sell position as you do when you're looking for the market to advance or extend when you would put in a long position. So I just broke out a couple of different stocks, a couple of the big dogs. I'm going to look at Apple real quick. Okay, now let me just go back to the screener just to be sure. So Apple isn't on here for some reason. I have no idea how they're not on this list. But anyway, starting with Apple, a stock that's now trading. This is a post market. The market's just closed. And of course, yes, it did have this was a red day for Apple. And they've had a couple of them in a row. They had a red day today, March 4th. March 3rd was a red day. So they're, pretty much just riding this whole wave down. So it's important for you, the trader and investor, to know that you can trade the market both ways. So how would that look? Okay, we'd be doing the same thing. Remember, there's identify, predict, decide, execute. So looking at this, of course, and then with an understanding that the market respects structure and it's always going to get sucked down to structure, no matter what. So when you're looking at this, all right, and you see, we're on a daily chart, by the way. I'm gonna have to come in closer when it gets time to talk. But you see this wick here, but it still ended up bullish, but it's still a bearish candle. And then, of course, you see price reverse and start to come down. So there's a couple of things that you would have to take into consideration here. Remember, predict, decide, identify, predict, decide, execute. So the first thing that you would do is plot out that market and say, where is it going? Predict, where do I think this is going? Okay, and then if you have an understanding of advanced pattern recognition, you should be looking for the next pattern, because those are going to be the most major Fibonacci ratios. Those are the areas that are going to get respected before any other. Even if they ultimately don't hold, you're still going to want to look at those to kind of help you decide where you're likely to end up. So in the case of Apple, you see it printing up a bullish, okay, even though at this point you're so nervous and you have a short bias, it's printing a bullish Gartley pattern, okay, that would look like this. Okay, so what you've done by that, if you have simply predicted where the market's going to go, okay, you have made a prediction, because it's very likely that this is going to get sucked down to this area or lower. Okay, $224. That's your target, because remember, you've been frightened to death and fear mongered to death. I mean, there's a good reason you want to get involved in this correction here, right? I'll give them that. But you're so afraid now, you don't know what to do. You know you don't want to buy anymore, so you're thinking about just sitting out on the sidelines. But why would you sit on the sidelines if you know you kind of got a ways to go? All you need to ask yourself is, well, how do I get involved? And you need a safe way to get involved in that. So you're going to keep coming closer and closer. You're going to keep coming closer and closer. And the closer you get, you're going to see that there's even more of this stuff, right? There's more of this stuff. So you're just going to keep identifying because your eyes are so sharp, and you're going to see things like this. All right, 886. So because you don't want to overexpose yourself. Okay, so you see this guy here. You say, well, that probably makes a little bit more sense than that big Gartley down there, right? So you say, okay, well, that makes more sense. Maybe that bat pattern is a little bit more likely as a target, just for me to just do something in the interim while I'm waiting for this whole thing to settle out. Will it? We don't know. When it's going to sort out, we don't know. But we do know that as of right now, there's two targets. There's the one that's way down there, and there's a target right here at 231. So you would want to know how to capitalize off that right there. So you'll keep coming in closer. Right now, we're already on 15 minutes, and all we're doing is looking for an entry. So we come into 5 minutes. All right. So you see a violation of the lower lows here. You see a close here, even if you're on a tiny chart like the 5 minute time frame. You see that you violated and closed and broken below these here in the 236 range. All you need is to come and look down and see that there's bullish divergence here. Okay. You need to know that there's bullish divergence right there. And also that here, well, the other good thing is here's your target right here. Okay. And you would want, if this were to continue, for this right here to push back up and retest this area here, which is the new support that got violated, right? It was support, bounce, 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 broke it. It should become resistance, telling you look for a correction up there. Okay. And then you just need to know how much is that. Remember, we're just building up a trade opportunity because we have that ability. There's so many other things at play here that might have gotten ignored, like 2618 technique, double top break and close, 618 retracement, roll over. Okay, so this is really showing you, if I just do this real quick, this is showing you you are getting involved in this trend. Okay, you just need to know where to enter at. Okay, how do you determine where to enter? All right, your eyes will tell you where to enter, and then you have this very, very sharp, amazing tool called the Fibonacci retracement to measure how much in terms of percentage. So we're not suggesting that it's going to bounce right off this and this is going to hold. It's probably something a little bit more major in there. So we'll just jump back to go verify, go back to the 15 minutes, go one time frame up and see if there's anything a little bit more prominent for us. And then remember, not these, but looking left. Here is the structure right here. Okay. Here it is right here, this bundle, this big box of struggle right here. See, he was sitting right there, but if your eyes are not trained, you can't catch this type of stuff. Okay. So that big box right there, I'm going to make it red because we want it to work as resistance in this case. Okay, so now you see where your zone is. You want to push and test up into this. Okay. And watch this. If we are to push and test back up into there, since we're closed beyond it on our little chart, we'll grab our Fibonacci retracement tool and we'll measure from the high to the low, and we'll see how much that is to get into that space. Because no matter what's going on, it's still going to be about structure. Okay. So you see the 618 retracement, right? Watch this. The 618 retracement is running right through it. Okay, it's running right through it. So that's showing you it's going right in there. So what you're able to do is tell yourself that if the market comes up and correct, this is going to have to take some patience, and this will take place tomorrow on March the 5th. Should technically, in this technical theory that I'm putting on display for you right here. Remember, we started way out here, right? We started like way out here. Remember, looking at the big dog, because that's in play too. The big Gartley is in play too, but we're focusing on the D-leg completion of the green bat pattern. as a target for us because we needed to identify a target, and we see that it's kind of likely as it's broken and closed beyond the structure that was there. So now we've plotted out, we know that that is the structure. We just need price to correct back up to it. Okay, and then once price corrects back up to it, that's our signal to get short, since we're so scared of these tariffs. But we're traders and we understand that the market moves both ways, and this is your TP. So you'd be waiting for that correction right there. You'd be entering around in that structure. When he comes and tests and pushes up against that and can't get out of it, he shouldn't be able to get out of it. You see how strong it is. You see that you got a break and close, you're going to get an outside return. Okay, just like you stood on it as support, comes up, break and close beyond it, come push back, a second attempt. That's where you're entering at. So your trade opportunity will look like this, okay, with a stop right above the structure. So this is coming out perfect. We'll do an ATR based stop in just a second to get the stop right, but this might be right. And we know at worst case, we can trade this down until this bat pattern fills, because we know that there's going to be a reaction off that. We don't know how far that's going to go or if that's even going to hold, but we know that's our target. So bring that in. So it's a beautiful, almost a 2-to-1 opportunity. This is what you're here for, okay? But I'm showing you can do it both ways. You can, if you get the correction back up here to that structure, which you should, because you got a break and close, you're going to get an outside return, a correction. You're entering at that point, and you're entering short. So the answer to the question is, what do you do in the middle of a trade war or in a bearish market? Is you take bearish trades. You put in sell positions. If you like to trade options, you put in puts. You set a limit order right here at 237. Mind you, the Harmonic Trading Club does not provide trading advice or give trading signals. Trade at your own risk. We are not responsible for what you do with your capital in these very risky, volatile financial markets. This is for education and entertainment purposes only. But this is how it works. And you need to be good enough to work it both ways. Okay? So you would potentially have that trade set up. The only thing that would stop you is if you never got the correction up to 237. And all that would mean is you're not in the trade. Also, the only other thing that would mean is, what would you do at 231? Because this bat pattern is going to have something to say. And you have to let all this stuff play out before you could even get around, maybe a couple of days later, who the hell knows, to even talking about what could happen here when this guy is filled. There's going to be something's going to happen. They don't know how big or small, but there's absolutely going to be a reaction off that big Gartley pattern. So let me just come back in and see if I can bring this home. Maybe I can do one more of these. You see how much goes into this type of stuff. Just one technical breakdown, a lot goes into it. But I would absolutely agree that there is an opportunity to get short should this correct up. And of course, we had to come all the way out to the 5-minute chart where we see the last thing that closed was a bullish green candle. Also, the other good thing about that is the wick. It's a bearish candle telling us that we're coming back here. Basically, that's what it's telling us. We don't know how far we're going to push up, but you're coming back here. I was going to talk about the ATR based stop on this, so let me go ahead and do that. As you all know, it takes a little bit of math to do that, but very, very simple. Just 2 calculations. So the price right there, right? So the price right there at the top of the structure, that's why you see the win-loss tool stop being above it, but the price is 239, and then you would need the ATR of that candle. So let's just go get that real fast and put this together to show what it would look like, because this is what a trader should be doing. If you've changed your bias, and if you see the market falling, there's opportunities for you to get involved and make money and grow your account that way as well. So I'm just going to right click on this guy. I'm going to bring on the data window, and I'm going to hover over this guy right here. And the ATR is 0.5067. So all I'm going to do is take the price of the wick of the high above the structure, which was 239.25, 239.25. And I'm going to add the ATR of that candle, which was 0.5067. 0.5067, and that's going to give me 239.75. I'm going to take that number and I'm going to adjust this line. If you want to see this done in greater detail, there is a class on the ATR based stop loss. So I changed that. And okay, see how it jumped up to the price of the ATR? I'm sorry, it was the price plus the ATR. So that's going to tell us the stop will go here. Help us tighten that up a bit, because now it's based off the average true range of this time frame, the average true range that each bar has in it inside of a 5 minute price time frame. Okay. So that's still, let me turn the ATR off. I don't need it anymore. And since I went so far on in detail on this one, really not too much on that does give us way more than a 2-to-1 with the stops right above the structure there too. So that's giving it just enough room to breathe. If it does come up there, if he goes long, he takes you out. If not, you're a big winner. And then you'd have to make a decision when this bat pattern is filled. All right. Hopefully you got all that. I know there was a lot in there. Let me jump over and do the same thing with AMD, because remember, we wanted to grab a couple of big dogs. Now it's going to be kind of like the same thing. I am out on the daily chart, and I did talk about AMD in a video, its own separate video, a few days ago. You'd have to check the playlist and see what's out there. So as you see that initial, I want to talk about something else first. Actually, the real pain on this one is missing it all together, because the trade was actually there. Like, we shouldn't even be having this conversation, because the market told you absolutely that Mr. Gartley was here and he was going to have something to say about all this. So I didn't even put this in the AMD video that I did, but really, to be honest with you, everybody could have already been laughing all the way to the bank and not caring about any of this stuff, courtesy of the advanced Gartley pattern that was sitting there right in front of our face. But I understand how people the lack of ability to identify harmonic patterns can be so devastating to some traders. But anyway, so this was there, and this goes back to October. Somebody could have just been in shorting AMD since October. How many months ago was that? 5-6 months ago? Anyway, so looking at that trend and then just seeing him ebbing and flowing away, right? Low, outside return, kind of like it does. I'll move it over here. New structure low, outside return, new structure low, outside return, new structure low, outside return. So many opportunities to trade all these pullbacks. And now we come into the same thing, right? But the good thing is some of the work has already been done for us, because we already have this big, beautiful bat pattern plotted up, and we know that the market wants this bat pattern. It's just got to work its way down to it. Okay. Meaning a trader, when this was identified, should have already switched to a short bias anyway. Now I understand that I'm on the daily chart and there are still opportunities to trade these pullbacks, absolutely. But that again goes both ways, trading the pullbacks to get short on them as well. Meaning when they come up, traders should look at how many opportunities that there was to get short. Let's just do it, right? Okay, one was the Gartley, of course. That's 1, 2, 3, 4, 5, 6, 7, and then your next one, number 8, is going to be coming up very soon, somewhere in here, because you see that you got room to work before Mr. Bat Pattern is filled. And who knows, he might have something to say. Trade wars might be over, market might just be doing great, who knows. But I just wanted to point that out. Now it is your job and responsibility to find out how to get in. So let's talk about it. It's the same thing: identify, predict, decide, execute. We've already handled some of the identification and the prediction, but it's deciding what to do with this. And hopefully you've already decided what to do. So seeing that price was oversold and showed bullish divergence, okay, that's telling you that at this point right here, price action probably wants to pull up, okay. You see what it will do in many cases is the outside return is back to previous structure. Okay, outside return back to previous structure. Okay, outside return back to previous structure. Okay, outside return back to previous structure. Okay, so outside return back to previous structure. So you would need to know, how much do I need this thing, this green, to continue pulling up to let me in? And of course, you do that with Fibonacci, because it's going to be a certain percentage that's going to line up with this structure, because that's how the market works, whether you like it, hate it, understand it or not. So grab your Fibonacci retracement tool, put it on the price action here on the top of that wick, measure down to the low where he stopped and he's turning around. We're going to come in a little bit closer too, because there's even more. So this is one green day, but if I break this up into 4-hour periods, it's probably 2 or 3 of them. So like that, see, it's 2 of them. I jump from the day to the 4-hour. That's letting you know that you had 8 hours of market pushing up, was completely extremely oversold, and it's got to push up. Okay, remember, we're concerned, our concern is this leg here and the correction back up. Okay, that's what we're concerned with. So if you notice, when I measure from the high to the low, guess who's there? No one better than Mr. 618 Golden Ratio to save the day. He's sitting right there at the structure. Okay, remember, you're going to have a push up. You're going to have a push up. Oh, let me move that out the way. You're going to push back up to previous structure. Okay, previous structure is right here. This is the structure right up in here. This guy's, okay? You see that? This is the structure. That's what needs to be retested. Okay. So, and that happens to be a 618 retracement. So it doesn't really get any easier than that for you. So let's go ahead and finish this bad boy up and look at this opportunity to get short, to get way down here. I should have a happy face for this one here, but let's finish it up. At least now you'll know what to do. If you're so scared and paranoid, you're going to take what you know, what you've learned from the Harmonic Trading Academy, and you're going to do it in reverse. It's that simple. So if you can get up to $108.68, your trade opportunity with you entering right there will look like this. And it is very powerful if you can pull this off. Okay. All right. So we know that if you enter on the 618 retracement, you're giving yourself some room. You know your stop needs to be above the previous structure up there. You know where the target is. You want to ride this thing down to that big, beautiful boy. And you know it's going there because you know what you're doing. And you got the patience and the guts to hang in there. And you're not a punk. You're not scared. You got this. Okay. So we're going to go back and do the same thing, because you want to make sure that you protect yourself and put a decent enough stop in play. So there's so much detail and detail that's going into these breakdowns that I can't, unfortunately, do too many of them, because I can't have the videos go that long. But I'm trying to put as much information as I can into each and every little video. Give me a thumbs up if you've ever seen a technical breakdown like this, right? That's giving it to you the other way, because all people do is talk about how they're getting long every day. That's all you hear. But anyway, at $116 and then tacking on the average true range, the ATR base stop onto that. So grab it, go. Let me move this guy out the way so he don't get in our way. And I can probably get a little bit better on price there. Okay, so it looks like we're gonna be dealing with 116.54. Let's try to see if we can get that a little bit cleaner, because every penny actually does count in this too, like it does in real life. So okay, so we'll call it 116.56, and then we'll go get the ATR of that high of that wick. Okay, so we'll just go ahead and bring on the data. Grab the calculator, and we'll say that price was 116.56. 116.56 plus the ATR was 2.29. 2.29. It's going to tell us our stop needs to be at 118.85 as we try to short this bad boy, because we're not scared. You know, we're not scared. So we'll take this guy and we'll put that in there, and it's going to tell us where to go. And it happened to be a little bit close to the trading view tool, but we'll come down a little bit. Okay, so let's turn the data off and let's get rid of the ATR. And let's wrap this bad boy up. Okay, so you're sitting at a 3-to-1 risk versus reward if you can get the push up, and if you're not afraid to get short. If you're not afraid to short the market, listen, the market is trending downwards. It's telling you what you should do. It's right in front of us. The opportunity is there. Let it push up and correct. Okay, identify the market was trending. Okay, predict. I predict that we're going to come down here. Market wants to suck down here to $73 for AMD because the tech sector is doing so bad. No matter what they say about all this AI and quantum computing, it doesn't matter because you just made a prediction. Okay, sometimes we're right, sometimes we're wrong. Okay, decide. I decided that I'm going to take advantage of a trend continuation opportunity. I've decided that I want to get short. Okay, and execute. How do I do it? Let price action pull up. Retest the previous structure. Okay, that it broke and violated. Lower low, lower close. Okay, outside return. This is the structure. Break the structure. Retest the structure. You know that that's your entry. You know that because you understand how a market moves. And you're just simply trading, like they would say in today's terms, you're trading this pullback. But if it works in your favor, it could be very, very powerful. And if it goes against you, it's not going to hurt you that much, only unless you over leverage. But the opportunity is there. So wanted to just go ahead and do those. I could do that all day, every day with each and every stock. I do have a long bias on most of the things like I showed you in the screener, but the things that I'm talking about here are some things that I might have to consider for myself as well. But hopefully this video provides some value to you. The market moves both ways. Use your skills and you take advantage in both directions, all three directions. Bullish, bearish, or sideways, you need to be prepared. And all I'm here to do is show you and give you the skills and the techniques so that if it's moving sideways, you can go advanced pattern crazy, because that's when most of those are created. And if it's trending down, now you know how to get in it if it's trending bearish. And if it's going long, I think we did one of those the other day, but if not, we'll do another one. So give me a thumbs up. Okay, that thumbs up is not for me. That like is not for me. That like is so that YouTube can go help other people like you learn how to do this. Okay, so that YouTube can know, hey, they really like this, so let's shoot this out. Okay, share the video with any aspiring trader or anybody who's interested in just learning more. Okay. And subscribe to the channel if you're not subscribed to the channel. If you're not subscribed to this channel, I have no idea why. Look at what we just did. Turn your notifications on. Don't leave your notifications off. Subscribe, turn your notifications on so that as I do these videos every day, sometimes once a day, sometimes twice, sometimes three, you're notified. Okay. That's all we have on this one. You guys take care of yourselves in the market. Be careful. It is rocking and rolling out there. Do not over leverage your accounts. Protect your capital. Do not trade the market without a stop loss. All right. I think that's all I got on this one. Leave your comments. I'll try to reply to them as they come in. As always, guys, take care of yourselves. I'll see you in the next video.